Yes, Unnati.
A very warm welcome to all our viewers to the 15th edition of Cedrus Knowledge Series, an initiative wherein we have one speaker each month speaking on a variety of topics ranging right from investing to well being. We will now have a brief introduction of Cedrus Wealth through a video. For our 15th edition, we are extremely honored to have with us Mr. Nilesh Shah as our esteemed guest, Managing Director, Kotak Mahindra Asset Management Company. We will now play a brief video to further introduce him. A very warm welcome to Mr. Nilesh Shah. We look forward to having an extremely insightful session with him. Once again, a very warm welcome to all our viewers and our speaker. I would now like to hand over to Mr. Nilesh Bajaj for taking the session further.
Thank you, Unnati, for the introduction. Welcome, Nilesh Bhai, and welcome all our viewers. I've known Nilesh Bhai since the past 20 years now, and he's fondly called by everyone Nilesh Bhai as he's forthcoming in his and guiding all the stakeholders, be it investors, the advisory and distribution community, as well as the investment fraternity at large. He has turned two mutual fund houses into big success stories, Kotak Mutual Fund as well as ICICI Prudential before that, uh, which he's currently leading right now. Uh, Always a soft-spoken, his views are highly respected by the investment community at large. Uh, so for the audience info, this is a moderated session whereby we will ask Nilesh by our set of relevant questions. In case you have any questions, you can post the same in the inbox and we will take the questions further. Strictly, please do not ask any questions related to stocks or sectors, as compliance would not allow us to divulge anything of the same, in fact. So Nilesh bhai, uh, you know, uh, we started Cetris about our journey started about 15 years back in February 2007, uh, when the markets were in the last leg of the rally. I remember the Sensex was at around 14,000 levels, and there was a lot of exuberance among investors. You had a lot of new investors, which we are seeing even now, who came and invested in the equity market. And that I remember that time it was the infrastructure sector where a lot of investments was happening. Today, the Sensex is around 56,000 after correcting from that 61,000 levels, which is approximately four times in the 15 years of the journey. In fact, both the markets as well as the wealth management industry has grown leaps and bounds in this last 15 years. So my first question to you is that are we in the same situation as in 2007, where there is a lot of exuberance, a lot of investments come in the last leg of the rally, and or is this time something which is different?
Uh, First, Nilesh bhai, heartiest congratulations on completing 15 years.
Thank you, Nilesh
And
bhai.
I will say that this time it is different. In 2007, if you notice, Fed was extremely loose. 2022 also they are extremely loose. So there is some similarity.
Hmm.
But in 2007, our valuation was much higher compared to what it is in 2022. If I remember correctly, we were trading more like 30 times forward earning. Today we are at about 18, 19 times forward earning. In that period, uh, infrastructure and construction companies went hyperbolic. Were they profitable? Answer is no. We were giving value to a real estate company if they bought 1 acre and said that I'm going to sell this in square foot and I'll make so much of money. Today, that kind of business model is not there. There's no infrastructure company, there's no construction company, to be precise. I still remember, I think one company's market cap in infrastructure was higher than the entire pharma sector valuation. Today, those kind of uh, pockets are very, very small. I mean, I'm not saying that there's no excess valuation in market, but that's on a small segment, and most investors are not present in that.
Mhm.
2007 was driven by greed. If there was a correction like yesterday, many people would have redeemed, not invested. Yesterday, we saw many people invest rather than redeem. So I will say that 2022 is different from 2007 in the form of investors' maturity, in the form of valuation, but is similar in terms of loose US Federal Reserve policy.
Mhm. But some similar behavioral aspects we have seen even now, where we have seen the last 6 months of 2021 seen maximum inflows coming in the equity markets. So one short advice you would give these kind of investors who are who have not seen the returns, which I know is a very short period of time, but there are many new investors who typically tend to get a little panicked when you see red on your in your books. In fact, so what advice would you give? One line advice to the investors?
So please accept ups and downs of markets just like you accept high tide and low tide in sea, or full moon and no moon in nature. Like
Hmm.
there is Poonam Ammas, like there is Jwar Bhata, there is
Hmm.
Teji Mandi in stock market. If you want to participate in Teji, you have to bear the Mandi. There's no excuse, there's no alternative, there's no shortcut. There's
Hmm.
no product in the world which will only give you upside participation in the market and no downside participation.
Hmm.
प्लीज थिंक इक्विटी मार्केट एज अ बॉक्सिंग रिंग. अंदर उतरेंगे तो दो तीन मुक्के तो खाने ही पड़ेंगे. एज लॉन्ग एज यू डोंट क्विट द रिंग यू विल मेक मनी.
Hmm.
अगर दो तीन खा के रिंग छोड़ के भाग गए तभी लॉस होगा. जब तक डटे रहेंगे तब तक लॉस नहीं हो सकता है.
Hmm. So you need to be the sultan.
एब्सोल्युटली.
Okay, how do you describe this journey? Now, this coincides with, like I told you, 15 years of our journey also of Cedrus. Uh, you saw the last big rally which ended in 2008 with the credit crisis. Uh, and the present one, what advice would you give based on the learnings of the past 15 years, in fact? Because you have seen a lot of ups and downs in the last 15 years also. And some specific experiences which you would like to share where, and what advice would you give investors? The learnings of the past 15 years?
So one, when I was young, I entered market in Harshad Mehta time, promptly lost all my money. And it was a small amount in today's terms, but for me it was 100% of my wealth, and it was a disaster. uh, Fortunately, I was lucky to meet an elderly gentleman who taught me few things, and
Mhm.
this is all in the context of Hammam Street behind Dalal Street. So he said, on Dalal Street, we do Lakshmi Pujan once in a year on Diwali day, but you have to do Saraswati Pujan every day. In essence, he meant that you have to do your own research to invest in market rather than tips. If you are student of Saraswati Mata, then only you can get the blessings of Lakshmi Mata in stock market. Otherwise, it will disappear.
Hmm.
Second thing he told me was that there was a very famous hotel called Dwarika whose samosa were very famous. He said, even if Dwarika samosa is good, you won't take vasi samosa to your home. You want fresh samosa. So market का कचरा घर पे क्यों लेके जाता है? Why don't you take fresh item? Why don't you take good item? Essentially, never invest in non-quality companies. Invest in quality companies. Third, he mentioned that never get depressed by falling market and never get overexcited by a rising market. You have to be indifferent to rise and the fall of the market. You can't lose your balance. You can't become greedy when markets are rising and become fearful when markets are falling. You have to be neutral. It is the nature of the market to go up and down. Maintain your equilibrium, maintain your balance. Don't become too greedy, don't become too fearful. The other thing he mentioned is that अभिमान तो राजा रावण का भी नहीं टिका. Lord Ravan was very powerful person. He had Lanka entirely made of gold, but his ego destroyed Lanka. Never ever believe that you are guru of the market. You are always student of the market. The day you will have ego, you will be crushed to death. So please, please, please be humble. Keep on learning. Then he said, "Suniye sabki, kariye apni." When you are moving in market, 100 people will tell you to buy those things, but none of them are interested in helping you make money. Other than your mother, father, no one is interested about your well-being. So listen to all and do what you think is appropriate. So there are this small nuggets which this gentleman passed on to me over a period of time, and they were all very commonsensical things, except swings of the market, focus on your fundamentals. The other thing which he talked about, utavare amba na pake. You can't get mango fruit in less than 12 years. You have to wait for 12 years. So be a
Right.
long-term investor. Uh, One thing he also mentioned was that on Kali Chaudas day, we take kachra out of our home. This is the custom in Gujarati house. I'm sure it is there in many other
Right.
segment. He said, do that kachra saf thing in your portfolio also. While you will be cautious at the time of entry and not take kachra company, but you are not God. Your investing company can become kachra. Cut your
True.
losses and move on. Don't stay invested with that. So very, very simple, commonsensical thing, but it was probably his 5-6 decades of experience, and that came handy for me. I will also recommend investors to follow that. Focus on fundamentals, be a long-term investor, invest in quality, don't have ego, don't follow tips, do your basic groundwork to make investments.
Yeah, Nilesh bhai, in fact, you have mentioned so many do's and don'ts in such a lucid way by giving such easy examples. Uh, in fact, you have answered my third question, but I'm sure as we are talking today, and everyone does not have the uh, uh, is lucky to have someone who's been guided, in fact. Uh, but in the last 6 months, you saw so much money which came into the equity markets, and first-time investors. You saw it in the newspapers also that more than 1 million new demat accounts were opened. Uh, uh, then we have seen this big fall in the last 1 month, especially yesterday. As we are speaking today, when the markets have risen, yesterday the markets fell by about 4.5-5%. investors who have come in for the first time, who have not been guided, in fact, and who have never invested in equities or have come back to equities after a very long time. पहले मार खाया होगा फिर नहीं आए, then they saw the exuberance and they've come back. What advice would you give them uh, regarding how do they play out the volatility in the markets, in fact?
So, Nilesh bhai, there are multiple ways of playing with volatility. One is a
Hmm,
Kumbhkarna approach.
hmm,
Buy quality company and go to sleep for 14 years. After 14 years, when you wake up, you will suddenly see good appreciation.
right.
Now, this is a metaphor. Obviously, you can't just invest and forget about 14 years. You still have to monitor the quality. But the metaphor is that don't
Hmm,
look at day-to-day prices, look at
hmm,
over a period of time.
right.
The second way to manage volatility is through asset allocation.
Hmm,
You buy when markets are correcting and valuations have become cheap.
hmm,
You book profit when markets are rising and valuations have become expensive.
hmm,
You buy low, sell high, you invariably make money.
hmm,
People try to do this reverse way on prices rather than on valuation. You have to
hmm,
buy when valuations are low, not just when prices are low. You have to
right.
sell when valuations are high, not just prices.
Hmm,
So the asset allocation will ensure that you will invest more when markets are cheap, attractive, and take profit out when markets have become expensive.
hmm,
You can also achieve the same by long term investment. So, these are
hmm,
the ways which one will have to take into account. At the
true.
end of the day, there are only three things required for making money.
Hmm,
Little drops of water make an ocean. So, please be a regular investor.
hmm,
Many people believe income minus expenses is equal to savings.
hmm,
It's the reverse way. Income minus savings should be expenses.
very
So,
true.
if you have savings, you have to invest. It has to be regular.
Hmm,
Second, don't put all eggs in one basket.
hmm,
Many people invest in equity in October 21 because last 12 months, 15 months return was 100%.
right.
No. Divide your wealth in debt, equity, gold, real estate, and offshore assets.
Hmm,
That diversified basket will ensure that you will be able to withstand any volatility.
hmm, hmm,
Third, be a long term investor.
hmm,
As I mentioned earlier, there's no shortcut to success.
hmm,
If Dhirubhai Ambani has to build Reliance Industries, he can't build it overnight. It gets built piece by piece, day by day, year by year.
hmm,
Think equity investment as partnership with the entrepreneur.
hmm,
Today, Tatas, Birlas, Ambanis, Adanis, they are the greatest entrepreneurs of India. When I buy shares in their company, I become their partner. I become a very small, marginal partner, but I'm still partner of Tatas, Birlas, Ambanis, Adanis.
hmm,
Stock market is such a powerful thing. It allows an individual, an ordinary individual, to become partner of Tata's, Birla's, Ambani's, Adani's. Think of that as an investment.
hmm,
When your daughter or son marries to a bride or bridegroom,
hmm,
uh, you wish for a long term marriage. You don't believe कि चलो अभी 3 महीना यहाँ पे मैरिज कर लो, फिर 6 महीना वहां पे करेंगे, फिर 12 महीना वहां पे करेंगे. You want happy marriage, long lasting marriage. Think
right.
this partnership with Tata's, Birla's, Ambani's, Adani's as the marriage, as the
Hmm,
partnership.
hmm,
So be a regular investor, be a long term investor, be a diversified investor. These three things put together is all you need to create wealth.
absolutely. Now coming to something related to this fall. In fact, there were red flags which were already there. I think in the exuberance, people didn't really take it very seriously. When you were saying inflation was rising, the globally interest rates were expected to rise. Central bankers have been making a noise about it, and valuations are not very cheap. They are not maybe not very expensive, but not very cheap definitely. The only bright spot was the corporate results, in fact, which came in December also, which were much better than in so many years now, in fact. Add to that, now has come this Ukraine war. We can call it war now. Earlier it was a standoff, but now as Russia has declared it in form of a war, we can call it a war. In the past, we have seen this happen with Afghanistan, Doklam, and then in India you have seen Doklam and the Ladakh standoff. Markets fell and they actually they recovered faster than they fell. In fact, so do you feel one can really we afford a war after coming out of a COVID-like situation where economies are not as strong as before in the last 2 years? Not all economies are strong. And second thing is, do you feel that a situation like what we have seen in the past can emerge even now, where the markets can rebound also as fast as they have fallen? In fact.
So in reality, Nilesh bhai, what happens is that market always try to discount a scenario. Now, if actual events turns out to be better than that scenario, market goes up. If it is
Mm,
worse than that scenario, then market comes down.
mm,
So today, market at 18,500 Nifty was discounting that Russia and Ukraine will not go to war
true.
and oil prices will not rise.
Mm,
Now, when market realized that that assumption is wrong, it corrected.
mm,
Today, market is discounting that NATO will not send its troop to Ukraine, and this war will not escalate into world war where Germany, UK,
mm,
France, US is on one side and Russia and China is on the other side.
mm,
Now, if that doesn't happen, markets will be where it is. But in case that happens, then markets will certainly correct.
right.
The
Mm,
market is assuming that there will be no use of nuclear weapons in this war.
mm,
Now, what
mm,
forbid if Russia decides to use one, then certainly markets will correct. So
right.
market is processing information at all point of time.
Mm,
Now, at one point of time when India Doklam happened, there was fear
mm,
that China and India will go to war. Market corrected. When that didn't
right.
happen, market recovered. In
Absolutely.
Ladakh standoff, there was a fear that for the first time, I think after 1975, we saw death on the border because people
Mm,
started using handmade weapons, but they
mm,
still didn't use the conventional weapons like guns and machine guns.
right.
Now, when the death occurred, markets came down, but when machine guns were not used to avenge the death, markets
Mm,
recovered.
mm,
So at all point of time, market builds a scenario and the actual events turns out to be better than that market goes up. If actual event turns out to be worse, then market comes down.
mm, mm. Uh, so, in fact, let's hope that this does not, Russia does not use nuclear weapons against Ukraine, who does not have one. And
Absolutely. So it is unlikely that they will use, but
yes.
in that rare, unfortunate scenario, if that happens, then
Mm.
markets can correct.
So, you expect volatility to be here, in fact.
Undoubtedly, because there will be events which will continue to happen. Tomorrow,
Absolutely.
who knows what NATO will do? Tomorrow,
Mm.
who knows how Russia will react?
Right.
We don't know what US Fed will do after this. So there
Mm.
will be newer information coming through which will continue to create volatility.
Hmm. One more thing, and what hurts India the most is oil. And oil at 105 is something which definitely, I think, one of my close friends always tells me, don't look at any parameter, just look at oil. In fact, India and oil are correlated the most. In fact, at 105 or even at 100, oh, is there any change which you see in the overall Indian economy? Because definitely at $100, we are under pressure. In fact, so what is your view on oil?
So, see, we have seen oil prices going up and down over the years.
Hmm.
And our markets sometimes have risen with higher oil prices, sometimes have
Right.
fallen with higher oil prices,
Hmm.
sometimes have risen with lower oil prices, sometimes have fallen with lower oil prices. So there is not perfect correlation.
Hmm.
Your friend is absolutely right in saying that watch oil because that's a
Hmm.
large part of our imports.
Right.
Now, there was a time when oil at $40, $50 a barrel was too much for us because our
Hmm.
reserves were low, our current account deficit was wide.
Hmm.
Today, at $100 of oil, we are in a comfortable position. It does
Hmm.
create pain, but it's a bearable pain.
Hmm.
In 2014, also oil was 100. Today, also oil is at 100. In
Hmm.
2014, we had $300 billion reserve. Today, we have $600 billion reserve.
Hmm.
Obviously, ability to bear pain is higher. In
Absolutely.
those days, inflation was higher than today's inflation. So, our tolerance is high. In those days, our growth was lower than today. So, we had scope on taking on growth.
Hmm.
So, overall, I will say that $100 of oil does create pressure on us. It's not simple thing, but we are in a better position to bear that pain today thanks to our reserves, thanks to our IT exports, and thanks to our remittances.
Absolutely. Wonderful. In fact, this has given us a lot of clarity. Uh, Now, let's move on from equities and the economy to mutual funds specifically. In fact, we have seen many categories which earlier didn't get meaningful allocation. You had the index funds and you had the global funds, where they have been since long, but investors really didn't invest in those funds the way we have seen in the last 3 years, where meaningful allocation has been given to these categories. In fact, so do you feel the Indian investors are becoming more mature as investors?
So, if you look at Indian industry, Indian investors, it's not
Hmm.
a homogeneous crowd. सब एक
Right.
कलर के नहीं है. अपने वहाँ
Uh-huh.
पे तो बाहर गांव में बोली बदलती है. So we are a very, very large country comparable to continent.
Right.
So there is a segment of investors which have invested in mutual funds for last 15, 20 years. They have become
Hmm.
mature. Yesterday,
Hmm.
when the market corrected, they didn't even bother to look at the NAV because they have seen
Hmm.
that these corrections come and go. We have to remain committed to our investments.
Hmm.
On
Hmm.
the other end, exactly opposite, there are investors who are, let's say, not attuned to investment and they get panic when markets go up and down.
Hmm.
Now,
Hmm.
this is the set of investors who need people like you who will tell them that भैया ये सब होता रहता है, and don't
Hmm.
get panic, don't become greedy, don't become fearful, maintain equilibrium.
Right.
So we have seen matured investors, we have seen immature investors, we have
Hmm.
seen smart investors, we have seen not so smart investors. We
Hmm.
have seen people coming directly and making mistakes. We have seen people coming with distributors,
Hmm.
advisors, and avoiding making mistakes. It's a
Hmm.
complete range of menu available. We have seen every kind of investors in India. And
Hmm.
slowly, slowly, we hope that there will be more mature investors than immature. There will
Hmm.
be more smart investors than not so smart investors. There will be more long term investors than short term traders.
Hmm. Hmm. No, absolutely. In fact, I feel the advisory community is also matured. In fact, the distribution and advisory community, whereby you are seeing a lot of long-term money through financial planning, sticky money which is coming and getting invested in the right way, and I think that in turn has matured the investors also. In fact, uh,
Absolutely.
coming to the bond markets. In fact, this is something. In fact, just for the information of all the investors, Nilesh Bhai is looked upon as someone who can talk about yields and the knowledge which the debt market is something I remember 20 years back we used to follow. Whatever Nilesh Bhai used to tell is something which used to actually people used to very very closely follow. In fact, now you're in a different role altogether, and now we are talking about different asset classes. But I remember very distinctly we talking regarding fixed income, and people used to really follow you. In fact, for that, and this is the question which I'm sure a lot of investors also will be having is you know in 2007 the 10-year bond market that was at around 8%. I just dug up the data and I saw
Yeah.
that the 10-year yields was about 8%, okay, approximately. uh, it's currently at around 6.7 after coming, after actually they've hardened from 6% levels. in the last 1 year. In the past 15 years, you have seen innumerable occasions, whereby the yields have hardened and softened, and which has had a direct impact on debt fund performance. And in fact, I have always seen, debt mutual fund में वो accrual and duration का strategy चलता रहता है. The investor, the advisor also will tell अभी duration में डालो, अभी accrual में डालो. Okay, this is something which is we have been hearing in so many years now. From as advisors also we talk to the investors. Now, what advice would you give the investors? Okay, because definitely, the investor is very confused today. He's seen the interest rates fall, the yields come down. Actually, he's seen last year the yields go up again. Uh, the returns overall from fixed income universe is now muted, and it is expected to be so. Uh, so, if someone who wants to invest today in a long-term debt mutual fund, what basic advice would you give that investor? In fact,
So, Nilesh bhai, my first advice will be that even if you are conservative investors, please ensure that you have some allocation to equity.
hmm,
The diversification is very, very critical. Of
hmm,
course, equity will give you higher volatility, but that's why you will get higher return also. So
right,
don't be 100% debt investors. You need to have little bit of hybrid balance.
hmm,
Uh, if you have to invest in debt, my first recommendation will be to go for REIT InvIT portfolio.
hmm,
There are
hmm,
6 or 7 REIT InvITs listed on stock market.
right,
Last 1 year they have done extremely well. There will be more issuances. Please try to
hmm,
put some money over there, 15-20% of your portfolio across 7-8 REIT InvITs. That probably
hmm,
will give high single digit to low double digit return, albeit
hmm,
with volatility. Not like bank fixed deposit, they'll go up and down in value,
absolutely,
but over a long period of time, you will get high single digit, low double digit return.
hmm,
The second portion will be to go into dynamic bond fund. Well,
hmm, hmm,
fund managers play on the duration, on the maturity, and try to make money.
hmm,
Now, these funds also have high volatility. Some year they give negative return, some year they give double digit return, but on an average, they could be giving you high single digit in today's market scenario.
hmm,
The third allocation will be towards, in today's market scenario,
hmm,
funds which are focused at short end of the curve.
right,
PSU debt fund, corporate bond fund, short
hmm,
term bond fund, floating rate fund. These are the funds where one can invest. So, in
hmm,
this combo, you can create your debt investment portfolio.
hmm, hmm. But definitely, the expectation should of the investor also should be muted now compared to because the interest rates have fallen.
Undoubtedly.
Uh, yeah.
I mean,
Well,
if you remember, I said returns are ranging from in REIT InvIT high single digit to low double
right,
digit, in
right,
dynamic bond fund high single digit in the best case scenario, and
right.
other short term bond funds will be mid single digit. So effectively,
Mhm.
your overall portfolio return will vary from mid single digit to high single digit.
Yeah. You didn't mention credit funds actually. What is your, take on the credit funds? What is your
One
view on
can
credit
invest into credit risk fund,
funds?
but please be careful that there will be credit events. Now,
Hmm.
credit event means delay. It may not mean default. It may
Hmm.
not mean bad debt. There will
Hmm.
be some recovery depending upon what structure you have done.
Right.
So you will have to evaluate credit risk fund with little
Hmm.
bit of risk, with little bit of aggression.
Right.
It is meant for those guys who can take volatility of credit in their portfolio.
Hmm.
Uh,
Hmm.
you know, uh, Credit risk fund is more suitable with a 3 year, 5 year horizon,
Hmm.
where once in a while, if credit event happens, it does not really bother you.
True. Hmm. So what clearly we can understand is that, like equities, you need to diversify your fixed income investments also into buckets of InvIT, which is the on a higher side, or hybrid debt funds. You have the dynamic bond funds, as well as the short term, or the yields, the funds which are at the lower end of the curve. In fact, so
Absolutely.
Wonderful. Now, next is actually gold, in fact. And, I've done some data before talking to you because, I know you know all what the data you are very, you can catch very well. In 2007, actually, gold was at around 30,000 levels. Okay. Today it's trading at 50,000. On a per annum basis, gold has just given a return of about 3.5% in the last 15 years. Uh, should an investor actually invest also in gold? We talk about gold as an allocation. Okay, we need to give 5% to gold, but with the paltry 3.5% return, which is less than a fixed income instrument also. Okay. Do you feel you should actually invest in gold, or it's better to just stick to some fixed income funds than and not invest in gold? So, what is your view on gold, and how should an investor approach gold as an investment?
So, gold from 2007 to 2022 has not delivered great return because it delivered great return from, let's say, 97 or 98 to 2007.
Right.
It had, if I'm not mistaken, it went from some $300 to $1,000 or $1,200 in that time period.
Yeah.
So gold is chunky. If I
Hmm.
remember correctly, in 1980, gold was $800 a year. Today, it is $1,900 ounce.
Uh,
So between 1980 to 2022, there is a wide gap, and gold has hardly given double plus return. So gold
Absolutely.
is a cycle. From $800, it came down to $200, went up
Hmm.
to $1,200, again came down, then again went up, and so on and so forth.
Hmm.
At this point of time, we believe it's worth investing in gold.
Hmm.
Uh, if you see in Russia, they have moved their FX reserves from US Treasury to gold.
Hmm.
China at some point of time will do the same thing.
Right.
Their reserves are $3 trillion. So
Hmm.
their buying of gold will be supporting gold prices. So I
Hmm.
will say that one should look at investment in gold on the basis of high liquidity, low
Hmm.
interest rate environment, current
Hmm.
subdued performance of gold, and potential Chinese buying coming and supporting
Right.
gold prices.
Hmm. But should it be a tactical allocation, or should it be a kind of a strategic allocation that you allocate and just leave it? In fact, because
I
that's where
think
the investors are actually not made money in the last 15 years. In fact, so should
it
it be
should be a
tactical in
core
nature?
allocation. No,
Huh.
it should be core allocation. Gold
Okay.
gives you a very, very differentiated exposure
Hmm.
vis-a-vis other market,
Hmm.
vis-a-vis other asset classes. So it
Hmm.
should be part of your core portfolio.
Okay. Okay. uh, coming to again, the regulations which we have seen, in mutual fund industry. I think, mutual funds, since, ऐसा लगता है कि 2007 में जब चालू किया तो वो regulation हमारे लिए ही रखा था, but it's been evolving, and every year, you are seeing some kind of a regulation coming in fact, right from, we have seen abolition of entry loads to introduction of direct plans, reduction of expense ratios. Apart from that, about 3 years back, we saw recategorization of schemes, where a lot of schemes got consolidated, and true to label kind of names were given. So, credit risk fund was called a credit risk fund, and you could not name it as a corporate bond fund or any fund, which, earlier fund houses used use. Uh, so, definitely things have become more streamlined. We have better regulated. Uh, one question to you is actually, uh, would it continue and benefit the investors? Is it beneficial to the investors? And what is the direction of the regulator per se? Uh, what is your view on that?
So undoubtedly, scheme categorization removed the clutter. It made apple
Hmm.
to apple and orange to orange comparison rather than apple to orange comparison. We
Right.
were one of the fund houses which requested SEBI to do this, and we are
Hmm.
thankful to SEBI that they implemented it.
Hmm.
This is essentially to create simplification in front of customer.
Hmm.
Uh, Most investors want simple things, straightforward things.
mm,
They don't want where they see one thing and get another thing. They
mm,
want to get what they see and they want to
right.
see what they get.
Mm,
Scheme categorization and many other such regulations by SEBI are
mm,
step in that direction where our transparency remains highest, and that
mm,
transparency brings the trust and confidence of investors. Many
mm,
of us believe that we are in the business of managing money. That's not
right.
true. We are in the business of managing trust and confidence. If I
Mm,
have your mind share, I will get your pocket share. आज नहीं तो कल पैसा आएगा ही आएगा. But if I
absolutely
have only your pocket share and not your mind share, आज नहीं तो कल वो निकल जाएगा. So
true.
we have to be like Caesar's wife. We have to
Mm,
be beyond anyone's doubt. We have to be
mm,
transparent. We have to be trustworthy, and that
mm,
can only happen with, you know, regulations like scheme categorization.
mhm. One more thing, what happened is, the universe of funds, a true to label, uh, which happened, where, now the regulator is very much involved in where actually the each category can invest, the universe of, investments, which now the regulators have categorized accordingly, in fact. So do you feel, it can lead to a little bit of underperformance also, specifically in the large cap funds, because it will be more difficult in case the fund manager cannot go beyond the 100 stocks. Uh, would it be more difficult? And are index funds actually the way to go for a few categories?
So, are there challenges in beating index? Answer is yes.
Hmm.
For example, in my fund, I give you day-to-day redemption facility. It
Hmm.
doesn't come free. In
Right.
index, there is no day-to-day redemption, so there is no cash.
Yeah.
When you compare a 95% or 90% invested fund with a 100% invested index, and
Right.
equity does well over a period of time, the fund manager is bound to underperform.
Hmm.
Number two, in index, you can include a stock and exclude a stock at the closing price.
Hmm.
Real life does not give you this flexibility. You have to incur price to get in or get out.
Right.
In fund, you can't go beyond 10% investment in a stock.
Hmm. Hmm.
In index, Reliance was at 14%, HDFC was at 12%,
Hmm.
HDFC Bank was at 12%. So
Hmm.
these are all practical challenges of generating alpha over benchmark index.
Right.
In fact, if you notice, many index funds underperform benchmark index by between 50 basis point to 1.5%.
True.
So even index funds are not able to replicate index in India because of these considerations.
Hmm.
And yet, despite all those odds, fund managers have delivered alpha by
Hmm.
outperforming benchmark indices.
True.
Our majority of funds
Hmm.
have been outperforming benchmark indices with
Hmm.
alpha generation.
Hmm.
So, as an investor, you should invest in those fund managers which are able to generate alpha, which are able to add value to you by
Hmm.
delivering more return than benchmark indices.
True. Absolutely. In fact, you have clarified on so many things. I've asked you questions on all asset classes, in fact, uh, because today investor is actually confused. What is the right asset class? Asset allocation definitely is a very important thing, but today it's a bit of a confusion state where the equity has already, seen a good 2 year rally. Interest rates are low, gold was lackluster, and real estate is something where, a typical investor uh, is not very keen to invest. In fact, it's given a lot of clarity to all our investors. My last question to you, Nilesh Bhai, in fact, is future outlook on all the asset classes we just talked about. Equity, debt, gold. Okay, and what advice would you give investors? In the midst of the volatile equity markets, hardening bond yields, and the lackluster gold returns. Right.
So I will say keep equal weight to equity as an asset class. Within that, be marginally overweight large cap and be marginally underweight small and mid cap. If there is correction in market, and valuation becomes below historical average, which is likely to happen at about 16,000 Nifty, then you can increase your equity allocation gradually.
Mhm.
Please continue your SIP so that your regular investment in equity continues.
Mhm.
On fixed income, either be with dynamic bond fund or with the short to medium end of the curve.
Mhm.
Again, equal weight fixed income. Gold, you can be overweight.
Mhm.
Real estate, you can be equal weight. We believe real estate also will do well.
Mhm.
This is broadly the view on various asset classes. Within fixed income, be overweight, REIT, InvIT.
Mhm. Wonderful. In fact, these are very wonderful ideas because I'm sure most of the investors, including the advisory community, does not look at REITs and InvIT, as a part of an allocation of an investor. In fact, Nilay bhai, we'll have three audience questions relevant, something which has not been repeated. It should not be repeated. So
Sure.
I'll just pass it on to Unnati Shah. In fact, thank you very much for this enlightening session. As always, it's a pleasure talking to you. I'll just hand it over to Unnati now. Thank you.
That was a very insightful session, sir. I'm sure your
Thank you.
inputs on being a regular investor, a diversified investor, and a long term investor has given our investors a deep perspective about investments as a whole. Moving to the audience Q&A, the first question we have is, what are the implications of the Russia-Ukraine geopolitical issue on the metal sector as a whole? How will this impact the food inflation?
So Ukraine is large producer of wheat. They also produce other food grains, and it is quite likely that global wheat prices and some other food grain prices may go up because of this conflict. China is holding world's 50% grain, so there is conspiracy theory also that they knew this is going to happen and that's why they have stored food grains. Uh, as far as India is concerned, our local commodity prices, food grain prices are de-linked to international prices to a great extent. And we have our food granaries full of food grains. This year we had record crop production. Next year, monsoon is likely to be normal as per the initial estimate. Net net, I don't foresee food inflation rising in India because of Ukraine. Certainly, it will rise in some of the other countries, but not in India. In terms of metal, China is a bigger player. They supply as well as consume metals. Because of Winter Olympics in Beijing, they shut down many polluting metal plants. Now, as Winter Olympics is behind us, those plants will come back on stream. Metal supply will increase. On the other hand, metal demand is likely to be subdued partly because of war, partly because of withdrawal of fiscal and monetary stimulus in Western world. Put together, we believe metal going forward will witness subdued demand and higher supply, which means their prices should remain soft. Now, it is likely that aluminum may witness elevated prices compared to steel or copper or zinc. So, there will be some variation within the metal sector, but otherwise, it should be by and large stable to subdued prices on the metal side.
Uh, our next question is, so in line with your inputs on investing in a quality stock, what are the basic parameters that one should evaluate while selecting a company, and how often should those parameters be audited?
So you have to buy good companies run by good managers at good prices. Ekdam easy to say, but very difficult to execute. What do we mean by good company? A company which will generate over a business cycle more return on equity than cost of capital. If you earn 8% and pay 12%, one day you will become bankrupt. If you earn 12% and pay 8%, you will continue to survive. A good manager is a person who has vision, execution, and ethics. vision to create something. Jamshedji Tata had a vision to build steel plant when no one in Asia was thinking about it. The execution, your vision can't get converted into things on ground unless until you execute. And more importantly, ethics should be there. Uh, a crook will ensure that all the profits of business are for himself and not with you. You want to deal with a person who will not cheat you. And good prices are prices where you believe valuations are in your favor relative to growth and profit. So, in a very simple way, good business is run by good managers, available at good prices, and you have a winning combination.
Absolutely, sir. And my final question for today is, what are the positives that one should bear in mind about the Indian economy going forward?
See, India is someone which never disappoints anyone. If you are too bullish on India, we do something stupid, then we disappoint the bullish Indian. If you are outright bearish on India, we do something which will surprise him also. So we neither disappoint an optimist nor we disappoint a pessimist. When everyone writes us off, we come back. When everyone believes we will have a cakewalk, we fall down. This is how India is. Keep faith in India, because in the worst of the dark period, we will rise, and in the best of the period, we may falter. So you have to be a long term investor keeping faith in India.
Right, sir. That was it from my side. On behalf of Cedrus Wealth Partners, I would like to thank Mr. Nilesh Shah and Kotak Mahindra Asset Management Company for making the time to grace this event, and to all our viewers for tuning in large numbers and making this event a success. We will return next month with a new topic and a new speaker. Until then, stay healthy, stay safe, and happy investing.
Thank you, Nilesh bhai. Thank you very much for your support.
Thank you.
Bye.